So a lot of things have happened over the past year or so in the Canadian payments and financial services space. We have the Stablecoin Act that's been enacted. It's not in effect yet, but we have stablecoin legislation. There are promises that the real-time rail at some point will be launched. And we have a government that is more focused on innovation and fostering competition that perhaps prior administrations had. And so with that in mind, I'm going to turn over to you, Avinash, Jason, and Brian. Maybe you can introduce what your input is in this ecosystem. And to start with a kind of a global question, what is it that stablecoins are solving in the Canadian financial marketplace that the existing rails, payment systems, and the banking system is not able to solve?
We're getting right into it. Should I go first?
You go first.
Okay, I'm Avinash from Cybrid. We're a stablecoin infrastructure company, and what we do is we allow businesses to convert from a traditional fiat payment into a stablecoin to then implement whatever their use cases are that they're trying to implement. And the reason that they're using stablecoins is it's much faster. It settles almost instantly. It's transparent. So when you do a transaction, you can prove on the blockchain that the transaction was done. And it's low cost. It just costs what the blockchain fees might charge for you to complete a transaction. So all that makes it true that already there's mechanisms for you to do faster payments, in the sense that once you're in a stablecoin and you want to go and make a payment to someone else, it happens in seconds. It settles instantly, and there's finality and transparency in that settlement. And so the hope is that there are many more stablecoins that are issued in Canada, and that more users can use them for a number of use cases, from peer-to-peer payments, cross-border payments, even investments into things like real-world assets. Those are all the sort of types of use cases that we enable with our infrastructure.
Perfect, thank you. Brian Ford, so I work with ATB Financial. So we are a government-owned commercial bank, regional bank based in Alberta. And we have been forefront of banking the crypto industry. We've now banked it for 9 years, so well ahead of any regulatory. So we have worked really closely to bring in a risk framework that allows us to bank and support the industry. We bank about 75% of the regulated crypto industry today, including all the stablecoin providers. What I would say is I fundamentally believe that stablecoin is going to transform financial services, not just within Canada, but globally, and we're seeing it today. And a lot, again, it's finality payment. I use the term atomic settlement, so immediate settlement, which is, if you think of whether that's a cross-border payment or whether it's capital markets, like, we don't have atomic settlement today. So I do know real-time rails for sure is real-time settlement. What I would say is real-time rails has been 10 years delayed. Before, I was in Asia for a number of years, and we saw the implementation of real-time rails 15 to 20 years ago. So, like, we're just a little behind the 8 ball. So I do have a view, which I'll share later, that I think stablecoins will leapfrog real-time rails, not just for international, but also for domestic payments. But yeah, pleasure to be here. Jason.
Awesome. Yeah, very nice to be here. My name is Jason, CEO of Paytrie. I'm also an advisor of Loon, which is a stablecoin issuer, Canadian stablecoin issuer. So in terms of real-time rails versus stablecoins, right? This is the main kind of focus of this panel. I kind of want to step back a little bit and kind of think about how stablecoins and real-time rails kind of are interacting. So currently, we are in the flip phone moment, right? Real-time rails is going to take us to the iPhone moment. And then we'll have apps that are built on top of the iPhone that's going to change the landscape, right? So these apps are apps that haven't even been thought of yet, right? So we're talking about agentic, we're talking about atomic settlements, right? Like everything that's possible. Some of these things are we're not even thinking about yet. So yeah, I'm super excited about all that's to come basically.
You forgot about BlackBerry in the middle.
You know, I was going to say, it makes me really sad.
We might be in the
'cause
we might be BlackBerry DAO.
I missed that haptic feedback. You know.
That's really sad because I used to work at BlackBerry, managing payments globally at BlackBerry.
You
so
guys
that-
are dating you.
It was a little sad.
Dating ourselves.
Maybe we're at the BlackBerry moment right now. We're moving to the iPhone moment.
So kind of turning back to real-time rail, right? Like, is real-time rail dead upon arrival, or is like the use cases for stablecoins and cross-border payments are like very compelling, right? Like you send a wire, it goes to a correspondent bank at the domestic level, and then a correspondent bank in home jurisdiction, and then it hits the beneficiary's bank. Stablecoins clearly bypass all of that. In the domestic space, if we have the RTR where you have P2P, B2B payments, subject to a cap, but you have that velocity that this new infrastructure operated by Payments Canada is going to support. What is the specific use case of stablecoins domestically?
We build a bunch of these use cases today. And we operate globally. In the US, we use RTP and FedNow to fund the creation or the minting of the stablecoin. And in our infrastructure, that takes about 45 seconds. So if you send an RTP into our infrastructure, you're getting stablecoins, USDC, for example, in 45 seconds. And we have businesses who then use that to pay their suppliers, pay their contractors, which is a traditional use case. Make a payment somewhere else around the world. It can take 2 weeks to get money to Hong Kong, but you're running out of inventory. You want someone to start shipping it to you. You can do it the day your ERP tells you you've run out of inventory. But the really interesting thing for us is we have these other use cases that we've built and we deliver in market. So, we support a company called Steak and Shake. They have 200 retail locations. You can go buy your burgers and your shakes using stablecoins. And so there's 70 million users in North America that have a wallet with crypto in it. If you hold stablecoins in that wallet, you can scan that QR code and make a payment for your burger, and we power that infrastructure. And the reason they do that is we're charging them 10 basis points to do that transaction. So the margin difference between the 2% that they might have been paying for interchange versus a few basis points is massive. And then the other thing we do is we were settling that to each store in 15 minutes. So someone comes and scans a card, or scans a QR code. That's good funds, stable coins that we received. We turn around and converted it to US dollars, and we used real-time rails to deliver to that business. That's a massive improvement. In fact, we had to do it once a day because they just didn't have operations to figure out how to take the money every 15 minutes and reconcile it. And then we've now been working with wealth companies who are trying to figure out how can we raise funding for real estate, or there's a company we work with for ships, another one for YouTubers raising capital for their YouTube videos. And so if you look at Reg A, Reg D, and Reg S type investment vehicles, you can have global investors spend up to 10 grand on your investment. And we process all of that over stablecoins. So now you can get from anywhere in the world someone sending you $10,000 worth of USDC, and we take that, send that to the issuer, notify the transfer agent that we have minted a token that represents that investment, and they deliver that to that user in their wallet. So those use cases are already happening today. And then the really crazy thing is we work with banks to actually help them do both cross-border payments. And what they've been telling us is if you look at banks, maybe in the south of the US, they have communities of users who send money home. And it's really hard to send money home and have an intermediary bank relationship and a settlement relationship with a global bank like JP Morgan to send money somewhere. It takes forever to get there. It's very costly. Now those regional banks, usually $10 billion and under the Durbin limit, saying, okay, we have regulations that says we can issue stablecoins or use stablecoins. So they let their customers get a stablecoin, send it to Mexico to their families. So we even see banks starting to think about, I can avoid all of that intermediary infrastructure and still serve our customers.
Yeah, to add to that, I always tell, the one stat you have to know is stablecoin, it exists today, right? It's used in Europe, used in Asia. Stablecoin volumes right now exceed Visa and MasterCard combined. Like that's a stat. It's a huge stat, and I don't not necessarily say it's apples to apples, like oranges to oranges. There are some noise in those numbers, but the reality is it's volumes that exist today. Obviously, cross-border payments is a big one, and you think about cross-border payments, not just its fact that it's highly slow and it's highly expensive. Stablecoin creates that atomic settlement, it creates real-time settlement, speed, efficiency, and it's just simply way cheaper, right, to move it on the blockchain. So that's an obvious one. The other one is corporate treasurers, right? So your corporate treasurer today, you got balances all over the world. You know, the ability to actually do settlement for your corporates, or so your bank, to offer a stable coin, so take the JP Morgan coin as an example, it allows the ability for corporates to settle again, atomically between their accounts around the world. And I came from a world, I was a global banker, I was at HSBC for years, and we established, you know, I would work on multi-currency cross-border pools for corporates around the world. It was slow and it was expensive, and it was legacy. Stablecoin will replace all of that. So there's a great use case there. And there's obviously the use case just in general for institutional players if you're moving money on the blockchain today within crypto that you don't want to move it out to fiat, right? You want to keep it on the blockchain. So that, you know, again, that's the use cases. I'll make a comment. I was in Asia for 2 weeks with my kids at Christmas. Everybody in Asia accepts either Bitcoin or stablecoin. All the street food vendors, all the restaurants, everywhere. Like it's all QR codes. So it's fascinating. And a lot of them were Bitcoin, but you wouldn't want to use Bitcoin for settlement because Bitcoin's volatile, right? So if I buy coffee with Bitcoin, well, that price isn't going to be the same. It could be higher, it could be lower. With a stable coin, because it's pegged to a dollar, whether that's the Canadian dollar or the US dollar, you know what you're getting. It will still fluctuate with the price of the dollar, but doesn't have the fluctuations of Bitcoin. So there is a domestic use case for sure, and it's retailers. So when I talk to retailers, we bank about 1 in 5 businesses in Alberta today. When I talk to retailers, their single biggest cost is Visa and MasterCard. So the risk here is Visa and MasterCard, and that's why you're seeing Visa and MasterCard buy stablecoin providers, because they have to transform, as do the banks have to transform.
And Brian, just a follow-up on that. Why does RTR not solve that interchange problem?
So RTR does. I wouldn't say it does, but it doesn't. Well, one, it doesn't solve it cross-border. I just think at the end of the day, stablecoin would just be an easier mechanism, right? It's an easier mechanism of a payment rail. I don't necessarily believe it replaces RTR. Like, I have a belief that where you have a number of payment rails out there, and you're still going to use all the payment rails, whether it's legacy, whether it's RTR, but you will get to a point where this, I can guarantee, like, I know the costing of RTR versus stablecoin, and RTR is way more expensive. So stablecoin is a much more cheaper, efficient, atomic, real-time settlement mechanism. I don't think it will replace RTR. I just think the cost benefit for banks will be better on stablecoin than it is RTR.
I mean, like, you'd have to take cash out of my dad's cold dead hands. He still pays with cash, and it's still here. And I don't think my kids they don't even know what cash is. So I think you're going to find that depending on the use case and the comfort of users and individuals, they'll pick the payment vehicle of choice. But there's, like 200 stablecoins now issued globally within regulated frameworks. And luckily we have one stablecoin issuer here. But I feel like we still need a few more rules to make it really sort of take off.
My kids know cash. It's called Dad's Cash.
I wanted to actually add on to Brian's points about the cost, right? Right now, sure, like you have RTR, but the cost of making micropayments might be prohibitive, right? Like, are you going to be able to pay fractions of a cent for API calls, right? When agents are kind of moving funds between agents. Right, so I think those use cases are really going to come into play in the domestic market as well, and then cross-border payments is obviously a big one as well.
So we talked about velocity of that the stablecoins introduce, the stability of the value tied to the stablecoin given the reserves. What about the important element of trust, right? So if you look at our stablecoin legislation, it has very strict standards for maintaining a reserve in the underlying currency, cash-like investments, HQLA, and a requirement for monthly attestations by council and certified accountants that the reserve matches the stablecoin issuance. But if you look at, so we had similar concepts under our recently introduced payments legislation, the Retail Payment Activities Act. Different world, but it essentially requires a payment service provider or a fintech to safeguard end user funds it holds with in a trust account in a formal express trust, so that if the issuer or I guess the payment service provider in that case goes down, the end user funds are held in trust. They're not accessible by the creditors of the payment service provider. But in one of the more recent cases where XTM, I don't know if you were following it, in the XTM situation, a payment service provider went down and is now under insolvency proceedings because they extended their hand into the trust account and basically misappropriated end user funds. And once you do that, you'll lose your license, insolvency proceedings will follow. But from an end user's perspective, for that shortfall in your trust account, you're just standing as an unsecured creditor together with the rest of the creditors to recover that shortfall. And so in that sense, you don't have a deposit insurance type coverage. In fact, the Stablecoin Act prohibits advertising that your reserves are deposit insured. So if we kind of apply that to the stablecoin regime and you look at a stablecoin issuer that in unusual circumstances misappropriates reserve funds or misuses the reserve funds, is there a concern that from a retail end user perspective that use of that stablecoin doesn't carry the same level of trust and reliability that a fiat currency or payment system supporting that would sustain?
I mean, I have lots of opinions, but he's a stablecoin issuer. How are you guys doing it?
Yeah, so I mean, at the end of the day, I think there are lots of checks and balances in place already, right? So you have, the auditors, right? Like with TradFi, you already have all those in place. Auditors, the rating agencies, all of that. So I think a lot of that is going to come into play, and then regulation is, I think, in general good because we're going to be able to get some clarity on what is needed, right? Like trust accounts, what is needed in terms of insurance, right? Like all of that. Right. So yeah, I think that's definitely needed.
Yeah, so we're regulated by FinTrack. We're RPAA registered. We are registered with the OSC and with CIRO, and we follow all their rules. That's a lot of rules for a country with 40 million people and a lot of costs. But if we back up to the stablecoin framework that the government announced, nobody's saying we don't want to follow that framework. We obviously want to secure stablecoins. We want to make sure that stablecoin issuers aren't partying in the Cayman Islands with those funds. And so there's already a framework in which everyone agrees you need to secure customer funds separately, that you need to back it with high quality liquid assets, short-term treasuries as an example. There's already examples of that regulation in the US and consequences from it. So I think the requirement in Canada is to start to move forward the way Europe, Singapore, Hong Kong, China, Indonesia, like all these countries have frameworks that have been put in place to protect end users. And here we have a framework, but regulators haven't yet written the rules.
Right, absolutely. And Brian, maybe one addition before you respond, given where you are with ATB. So with all of that, right, if you look at the larger Canadian banks, they're subject to OSFI supervision, FinTrack regulated, audited financial statements and all of that. If they screw up, you have deposit insurance coverage that holds at least most of the end users whole. I guess the question is there a gap in the framework that if a stablecoin issuer screws up, you don't have that same level of protection?
I would say that the regulations are evolving. So we built, what we have done is we built trust accounts with the regulators nationally, Ontario, Quebec, and Alberta, that actually protects the fiat. So it doesn't, so it protects that cash, the reserve cash that's held in the case of bankruptcy. So that was something that we built. We're the only bank that has it, and we built that together with the regulators to protect the fiat or the cash that sits in the bank account. And that exists not just for stablecoin, but also for exchanges, for custody. Any of the fiat is protected in a trust account. So that's the same type of trust that you'd have for lawyers' trust, for real estate trust. It doesn't mean that there isn't a risk, right? You see lawyers that dip into their trust accounts. You see real estate that dips in trust. That risk exists. So it's the checks and balances with the regulator, the attestations on a regular basis. That's what's important. But we do have it protected from a bankruptcy perspective. And that was really important for banking industry. So we would hold today, we'd be the only bank that would hold the stable coin, the currency to back it up. So for loan payments, we would hold that as a base, either in cash that sits in the bank account that's protected, or in fixed income securities, Canadian securities, which is really important because if you actually look at some of the issues that have occurred in the US, it's because they didn't hold it in fixed income or cash, they held it in other, such as Bitcoin, and that creates fluctuations. You don't want that. So the Stablecoin Act that the government's passing is really important to create that framework. It doesn't eliminate the issue that could there be abuse? For sure, but that exists everywhere in the banking industry, right? And that's what we work towards. The other thing that we do that's really important for our clients is we actually use technology. So we monitor the blockchain, we monitor the transactions of our clients, we monitor the reserve accounts every single day. So we're reviewing thousands of transactions, and that's something like the big 5 banks, as they move into this space, and they're going to move into this space, they will need to make sure that they use technology and blockchain monitoring. It's quite critical to be able to bank the space.
Terrific. Mindful of the time, so I think one other question would be, how do you see Canada position itself so that this innovation in the space is kind of welcoming Canada? Like, is the Stablecoin Act, the way it's enacted, you think, encouraging encouraging the more issuers coming to Canada and issuing stablecoins in Canadian currency in Canada, or are we seeing this as an impediment to all of that?
I mean, I think every financial services company, every bank, every fintech has a stablecoin strategy, and it's not a matter of waiting for regulations because this is already happening right now. We process billions of dollars of transactions in cross-border volume, and we process them out of Canada and out of the US. And then the other thing I would say to that is, like, everyone's moving towards the stablecoin framework that's been established, and we don't have to look very far to see things like the Clarity Act and the Genius Act to sort of see how it's settling across the world. You can't go and invest in crazy stuff to back your stablecoin. You can't share those with retailers. You can't, try and, like, the stuff that you would need to make sure that there's safety in that. But I think my point is, like, even banks, and if you're a bank, we are working with banks to help them do things like cross-border payments or tokenized yield products, like a BIDL product. And so the banks are making a push into the space because the technology benefits are very obvious. And so, to Brian's point, this is just something that's happening and is picking up speed.
I feel like we need another half an hour just on tokenization because we really didn't touch on it. It's huge, right? Like, I will argue tokenization is the next phase. Stablecoin is probably what Bitcoin was 10 years ago, and that's where stablecoin is at today, right? Bitcoin's established now, right? It's an asset class, it's an investment product. You should if you don't own Bitcoin, you should. But that being said, stablecoin's probably where Bitcoin was 10 years ago. Tokenization is now at the infant stages, and it's huge. Like, tokenization is massive, whether it's in cap markets. I don't want to get into it here because it takes too long. What I will say is stablecoin, digital sovereignty. So today in the system, banking financial system, cash, US dollar cash, is about 49%. It's a lot, right? I mean, it's the dominant currency. It's your reserve currency globally. When it comes to stablecoin volumes, 99% is US dollar, right? Which means today, so I always use the analogy, right? That would be like walking into your bank branch, and the bank branch, TD Bank or Royal Bank, they go, well, I don't have Canadian dollars to give you. I only have US dollars, because that's all we carry in the legacy world. That's what this means today. So you have to, all countries have to have a stable coin. It's your digital sovereignty. Like, face the reality. Cash is legacy. Going forward, it's all going to be digital, and it's going to be the digital dollar, and you have to have a Canadian digital dollar, and that's what stablecoin is.
Yeah, I mean, I think Brian put it very nicely. It's about sovereignty, right? Like if you are transacting in a U.S. dollar stablecoin, it's just U.S. dollar in a treasury, right? That's no help for us in Canada. So yeah, I think that's what's needed, and I think it's a little bit slow, but we're getting there.
And just to wrap it up, what are your thoughts on Stablecoin Act not covering bank issuers and the restriction on interest and yield?
So yeah, it's a gap. So we work with the regulators pretty closely. We've made it clear to them that you need to provide guidelines. Like, again, I have gone out there to bank industry, and I've championed it within ATB, but we worked with a lot of legal firms to know where we play and where we don't play. I find, like, I'm a big believer of access to banking. I want everyone to have access to banking. So I want the regulations clear for the banks, so our banks in Canada can know what they can do and not do. And it's not clear. It's clear for the custody providers. It's clear for the stablecoin issuers. It's clear for the exchanges. It's not clear for the banks. And that's we've talked to the regulators about that. It's really important to make it clear so we have ability and access to banking for everyone.
And frankly, like, some of the world's largest banks happen to be Canadian banks. So there's a severe disadvantage in the fact that the Ministry of Finance and the other provincial regulators haven't clarified how that works. Because whether you're Citibank or JP Bank with a JP coin, that's already moving well apace. And it's a disservice to Canadians if we don't actually make that clear or have that clarity soon.